Dear investor, Edelweiss Private Wealth Management is pleased to present you the latest issue of Investment Strategy Report for April 2021. Let's take a look at key highlights of March 2021. US 10-year Treasury bond yield has seen a sharp rise in the last quarter as expectations about inflation in the US economy began to revise upwards. Due to dovish stance of the Fed, yields at the shorter end of the curve continued to remain soft. As a result, US yield curve has been steepening with every passing month. US economic projections have improved to 6.5% growth in 2021 owing to vaccination drive and other stimulus planned by US government. The second wave of coronavirus cases, particularly in India, poses a risk to the economy in the short term. However, aggressive vaccination drives can provide the balancing act. Though consumer sentiments are dampened since onset of lockdown, sentiments about future expectations are quite optimistic. Equity view. Financial year 21 proved to be a year of stupendous growth for Indian equity markets. The bull run has been secular across market cap categories. Barring a couple of months, FII inflow remained strong throughout financial year 21 on the back of sustained global liquidity. Valuation indicators like market cap to GDP ratio have shot up reasonably above their long-term average. Rise in US yields and high valuation of Indian equity markets further add to the nervousness caused by rising cases in second wave of COVID. However, recovery in corporate earnings coupled with accommodative stance of RBI and rollout of COVID vaccinations provide positivity to remain bullish. We continue with marginal overweight call on equities. Corrections, if any, should be used to align with tactical asset allocation across risk profiles. Fixed income view. As per the borrowing calendar released in March, distribution of the issuances is more front-loaded at 60% of full-year financial year 2022 issuance. Both WPI and CPI are comfortably placed near RBI's long-term inflation target. This is aided by lower food price inflation and easing supply chain dynamics. RBI in their first policy meet of financial year 2022 decided to keep repo rate unchanged while continuing with accommodative stance till the economy recovery is well secured. The yields at the longer end of the curve are not showing any signs to cool off. Hence, the steepness of the curve is lingering around its all-time high levels. In order to keep the long-term rates in check, RBI announced government bond purchases of Rs 1 lakh crore from the secondary market. Investment opportunities in high-quality credit have significantly diminished. High-yield credit can be considered subject to appropriate due diligence. The credit spread can be expected to cool off as systemic risks will decrease with recovery in economy. Core allocation to high-quality credit with diversification across yield-oriented HTM solutions is advisable. Dislocations in credit spreads should be opportunistically used subject to proper due diligence.